following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking tune means it's time once again for the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com and a little thing we like to call the Options Insider Radio Network, upon which many of you are listening to this great program today. And speaking of a great program, we do have a good one in store for you today, because I am joined by the usual crew of outstanding contributors, indeed the all-star panel, as we like to refer to them. Starting off, let's start off across these great states of ours here, all the way, beaming in all the way from the great state of Maine, is none other than the rock lobster himself, good old Andrew Giovinazzi from OptionPit.com. Andrew, welcome to the show.
The lobster is in the house. Covered with snow, though. Covered with snow.
Is it really? Did it snow up there in Maine?
Yeah, we have like a foot.
Really? So you got out of Chicago just in time to get all the nice snow back home.
Exactly, and of course I did not get any more wood into the house, and I have to trudge it through the snow, which is not ideal.
Of course, you have some nice new Options Insider gear to keep you warm and stylish in that snow.
Actually, I was sporting my new black and white, with my kind of the racing stripe black and white Option Insider shirt.
Yeah, not ideal for snowy weather, but it's good for the tropical season of Maine, which lasts about 2 weeks.
Exactly. It's nice. It's nice under a sweater, too. It's very fine-looking gear. I swear you should sell those online. That's what I say.
I've heard that before. So perhaps we shall add that in the new year. We shall see. So you, too, the listener, can get a piece of it.
You can pay for that one if you want to.
Yeah, there you go. We'll send a check. The check is in the mail, as it were. That voice, listener, belongs to none other than Mr. Alex Jacobson, beaming in from Options Express HQ. Alex, welcome to the show, to you as well.
Yeah, thanks. A lot of news today, a lot to talk about.
Yeah, a lot of fun stuff to chat about, I think, on the old show. So we shall not be wanting for discussion topics today. But first off, let me introduce the final member of our all-star panel, beaming in from not so far away from scenic St. Charles, Illinois. He is good old Uncle Mike Tusaw from Know Your Options, Inc. Uncle Mike, welcome to the program, to you as well.
Always a pleasure to be here. Excited about the show today, as always.
It's going to be a good one. I have a good feeling. So I think without further ado, let's get to it and dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we look back on the day's trading activity and see what was moving the old markets. It was a bit of a bull rally today, as most of the markets kind of taking a shine, if you will, to the talk coming out of Washington that there is perhaps some compromise underway for the old fiscal cliff. Most of the major indices closing up about 1%, if not over. The S&P closing up about 1.2% on the day to 1430. The Dow following suit, closing up nearly 1% to 13,235. And the good old NASDAQ leading the charge yet again, up nearly 1.3% on the day to 3,010. And the good old VIX cash closing to the downside, down about 4% on the day. We'll see if that number holds as we record. Of course, we have a few more minutes here for the VIX cash to tick around before it finally settles in on the day. A lot of action, as I mentioned today. The bulk of the goodwill on the street seemed to be stemming from the rumors that there is a compromise in the works. Of course, a lot of us here on the show over the past few weeks have said we believe something would come to pass over there in Washington. It is funny when the news of perhaps $1 trillion in new taxes as well as about $1 trillion in spending cuts is seen as bullish to the market. That's just the great news for all of us there. $1 trillion in new taxes. But c'est la vie. That was enough to apparently spur the rally we saw today. So perhaps we'll start with you, Andrew, from the great state of Maine. Not too much really, I think, surprising on today's volatility action. A bit of a sell-off, a mild one, though, because I think a lot of people are still a little bit hesitant to go full hog on this till they see the fiscal cliff deal has come to pass. Wouldn't you agree?
Yeah, I mean, we've kind of had these fits and starts, right? Just looking at it, it looks like VXX is still a little lower here at the end of the day, about 4 or 5 cents. So I think the market is cautiously optimistic. Is that what all the talking heads say? Cautiously optimistic.
That is the pundit's term of choice.
He's joined the other side. He's a talking head now. He's cautiously optimistic.
No, what was interesting, though, is mostly all day long, market was up and volatility stayed pretty well bid to around a 17 VIX. And it really didn't start to lighten up here until about the last hour of the day. So, what we saw normally is we kind of, the market was kind of rallied all day, kind of in fits and starts, mostly depending on how much Apple wanted to rally. But for the most part, we were up on the day. But volatility stayed bid all day long. And so it's more of buy stocks, I think, mostly on the liquidity. And as the rumors got, improved in quality, then you started seeing the volatility back off. But we're still, we're still at a relatively high place for implied volatility.
Yeah, that was my comment, I think, for most of the day as well, that I was surprised how firmly VIX seemed to hold in there in the teeth of what was, from all apparent purposes, a strong rally on the market, yet VIX still held in fairly strongly, which is, I think, a good sign that everyone's still kind of playing the wait-and-see game, and they didn't really crush it until the end of the day, which is a pattern we've seen before. We talked before about this universe of ETPs floating around S&P and VIX and how they tend to all dive in the last 15 minutes of the day, and we certainly saw some of that today. In fact, VIX task ticking off a little bit as we're talking, only down 3.9% on the day now, so there we go.
Somebody heard our radio program.
Someone beamed into our little non-existent live stream here, and they decided to take the VIX cash, moving in the other direction. Well, Uncle Mike, I know you probably had a busy day out there in the land of St. Charles, Illinois as well. What was catching your eye in today's market activity?
Well, and from my perspective, and I guess I want to reiterate what Andrew had just said, but just to leverage all of our time, one thing that I've gone to the cookie jar one too many times, I'm convinced, with all these weekly puts and calls I've been selling on GLD.
Uh-oh. The degenerate premium selling is at an end?
Well, for now, just because of the fact that I finally am to the point to where we're close enough to where a deal might be met, so to speak, and I'm staying out of any short premium for now in GLD, just because of the fact that if we get a lot of movement and if GLD does react to the upside on it, I don't want to be standing in the way of a major rally for 48 cents. So with that, what I've been doing with it is I went out to February, and the hedge that we have in place for our clients that we have in GLD right now and the active management side of it, I just bought the 160 puts for $1.57. And so with that, because of the fact that it's just so insanely dirt cheap right now, I'm okay waiting a couple of weeks to start dinking around in the weeklies again if need be. But just like we've been talking about for the last few weeks, premium is very low right now in gold.
So this is the man who, if I recall, on our most recent show, expounded upon the virtues of selling premium and short-dated products. And now that all of our listeners have gone out and blasted away at some weeklies, now you're deciding to keep your powder
hear
dry.
me out.
I'm teasing. I know what you're saying. I'm just giving you. I'm playing a little bit of devil's advocate here.
Because of here's to expand on why. Because of the fact that right now, let's say I was a monthly premium seller. Have you ever heard of a monthly premium seller taking off a whole month? No, it wouldn't work. But because of the fact that these are weeklies, these are short dated, I can manage to go on for a week without doing it and pick right up where I left off next week should we have a deal going on.
And I'm just giving you a hard time, of course. As always, Uncle Mike, I think what you're really saying is that, have put some protection on, get some value protection, and let the upside ride a little bit, because it is in a good environment right now, particularly in GLD, where you might have a significant pop if something does work out. And if it turns to the downside, you have whipsaw risk or dramatic movement gap risk, if you will, in either direction, so owning a put is ideal in that scenario as opposed to selling a put, because you get all that nice built-in gap protection, which we like to talk about at length here on this show as well. So you're just changing the tools in your arsenal. That's all.
Absolutely. And to add to it, the same weekly tools are going to be there a week from today.
Again, getting to the flexibility again with all these weeklies. 5 weeks worth of weeklies. You can keep your powder dry for a week. Yeah, keep your powder dry for a week, and you come back in next week. And guess what? There will still be options to sell next week.
I'm so excited. I don't know what to do with myself.
I know. You got to wait a whole week.
Ay.
So you said GLD, of course, your other big holding. We have to check in every week like clockwork on this one because our listeners love it to death. That is, of course, the big fruit company out there in Cupertino. And I know you talked a little bit recently about some of the positions you have on. Any changes? We've had a bit of a retracement, then a bit of a bounce back today. Apple up about 1.5% or 2% today on the day to close at near about 519. So we're about back to where we were, I think, last time we talked about it on the show. Not too much of a change. Any change in your position out there in Apple land?
Yeah, since the last time we've talked, I have rolled down to the 510 puts for January. So as of right now, just short the 510 puts. And if we can just maintain these levels till January, I'll still be at break even. But my intention is, as Apple rallies, I do intend on rolling it up somewhat. If it rallies.
If it rallies. That is the nice thing about what we've been saying now in Apple, that it is indeed an attractive time to probably put on some positions here, particularly in the downside wing there in Apple. The upside is always bid in Apple just because the zealots are somewhat out of control and out in force there. It's one of the few equities where you could see almost near commodity levels of upside skew in that name. But you don't often see it on the downside, and we have been seeing it lately in Apple with given all these retracements. So it has been enough, I think, to lure a lot of recalcitrant Apple heads and a lot of perhaps Apple haters and even some recalcitrant premium sellers into the downside. I myself was bitten by that bug recently. All this talk of you writing all your weeklies and Alex coming on last week talking about the various put spreads that were being highlighted by the Idea Hub. I got lured to the dark side of Apple last week as well with a short-term DEES 465, 455 put spread. I figured that's a nice level for Apple. I can certainly trade in and around Apple if it does get down to that level and I get some put to me. And it's also just a nice, attractive premium level. The vol last week going into those strikes was just out of control. So, Uncle Mike, at least for the time being, you or I are on the same team.
It's amazing. I'm getting scared.
I know. This is the first time. It's funny. All these years we've been talking about, and I've been taking my shots at Apple. I've never actually jumped into those waters. I just never had the interest or the desire or perhaps the time or a combination of all of the above to really do it. And this past week, I finally decided that it was interesting. How about you guys over there in option pit land, Andrew? I know you've been looking at a lot of downside in Apple. Putting anything on that catches your eye? I think you were talking about out of the money flies last time.
We did Iron Condors. Iron Condor on Friday, which is actually, it was down a little bit of money. We put it on Thursday, and that's actually doing okay today. We had the vol came in a little bit, but it was like 590.95 and 470.75. So in January. So I think that's the kind of trade really, because it's still too whippy. I mean, it still had a $15 range today or something like that, or $14 range. So it had a $19 range.
Yeah, it's got some juice to it out there, both in a vol perspective and in, as you like to say, whippy. It is quite frothy out in Apple
really
land.
Is.
So you'll notice, listeners, none of us here are really talking about naked blasting out any positions or anything like that. We're really doing a lot of defined risk trades because that's just the sensible way to approach Apple, both from a risk perspective right now, because it is, as Andrew says, to use a technical term, whippy. And then it also is quite it's an easier way from a margin perspective to put the trades on you want to do in a $400, $500 trading name right now. So a lot of reasons to keep your risk predefined when you're putting on trades in a whippy name like Apple.
That is a technical term, by the way.
Yes, I know. I'm just giving you a hard time here. And
just as good as doing stuff.
Yes, almost as good as doing stuff. Buy some juice and then do stuff. I like it.
Nothing's as good as doing stuff.
That's true. Another title for your book, or perhaps the second edition. After you get the free juice book out, you can say the second edition, doing stuff. There we go.
Well, when Mike has to roll his next long gamma position again, when he has like a $90 move in Apple or whatever that crazy move was, so it'll make sense. He's like, oh, this is how you do stuff.
Yes.
You do it.
And Alex, what has been catching your eye over in OX land over the past few sessions and today?
Yeah, the stuff that's been really busy, other than Apple and Google, has been a lot of activity in Baidu, activity in Nike. Yahoo has kind of popped up again. It was trading near an all-time high, back over $20, I think, during the day. I think it sold off a bit out there near the close. But basically, the Idea Hub is kicking out a lot of Apple ideas, a lot of Q ideas. Talk about that in a little bit. Silver popped up on the screen today with a Feb Condor in silver. The silver ETF is mid-20s vol, so it's got some good premium selling ideas. But a lot of what we're seeing here is end-of-year stuff. You know, people harvesting some gains, people harvesting losses, and we're seeing a lot of year-end stuff going on.
You know, Alex, it seems that there is just a huge crossover between the OX clientele and Baidu traders. It seems like every time Grigas, from the dawn of the show, when Grigas was on, Tim Navabi, Rob, whoever was on from OX, there was always a lot of talk of the OX guys, whether it's premium sellers or what have you. They just love Baidu. They can't get enough of it. It's always a highly ranked name over there. I wonder what that crossover is. I don't know, but there's always strong penetration, it seems like, in Baidu over there.
Yeah, poor man's Apple.
Poor man's overseas Apple, I suppose.
Yeah, Apple and Google.
There you go. Maybe there's a synthetic trade there, Andrew. I know you liked your Zynga as synthetic Facebook before. Perhaps there's a Baidu synthetic Apple trade floating around out there as well.
I think Zynga is good to his name. Wasn't even up today. Was it the only stock in the market that didn't rally?
One of the few reds on the screen today, down about a dime to a whopping $2.44 on the day today. So of course, I'm sure you loaded up on more upside there.
I want to start buying some calls against some short puts. So
so you are going to put on the long leg. I was just teasing you. I know you were leaving the long leg kind of open there. If you got all these short puts, you got to start putting on the other leg of that risk reversal eventually.
I just, I'm just figuring, okay, when all the algorithmic guys need to buy a bunch of junk, when the fiscal cliff stuff happens, I want to be prepared.
Because when they're buying junk, they're coming to buy Zynga, because you are definitely meeting the definition of junk there.
Yeah, that's exactly. All the algorithms are focused on Zynga. Andrew, it's a $2 stock. Buy the stock. It's an option without an expiration date.
I just, you know what, though? I like the idea of buying, like, calls for 5 cents that I could sell for 25 cents. I don't know.
Yeah, or, buying them for 5 cents and watching them go off the board.
Well, if you're short some puts, it doesn't matter. So It's just, I don't think there's a lot of risk in it anyway. So
it's $2. Buy the stock.
I can't.
Spoken like a true old schooler there. And,
I can't buy a $2 stock.
I like it. Of course, before we close out the trading block, there's been a couple of big developments in the options biz over the past week or so that we haven't gotten around to chatting about on the show. I thought it'd be good to bring them up here really quickly. Of course, I think the first one is the the oft-rumored, oft-bandied about 11th exchange finally reared its ugly head and said, here we are, we're trading, we're active, we're live. It is, of course, the Miami Options Exchange, or MIAX for short. And they've been making some noise for a while. I remember someone pulling me aside at the Options Industry Conference back in 2008, a guy who I've known in the business for a while, a pretty well-respected guy, and said, wait till you see what I'm working on. It's coming out. I can't tell you what it is now, but it's going to be coming in about 2 years. This is 08, so obviously they missed that date. But it's going to be something to really keep an eye on. And, of course, he's since long gone from the project, and I think this name is somewhat I had lofty expectations for what Miami was going to be. It looks like, at least an initial run, is perhaps not going to live up to those. It appears to be another fee arb type of pricing destination. A little bit of faster technology, a little bit better pricing. Nothing really too outlandish. I was hoping for something perhaps a little bit more revolutionary, launching with a unique innovation that would bring some new outside business to the options market. I mean, perhaps I'm being a little bit cynical, but it looks like so far in the early iterations here, MIAX is not going to be that name. We also, on the exchange front, had an interesting development. Bill Brodsky, the longtime chairman and CEO of the CBOE, announcing he's going to step down early next year. His contract extended through the end of the year. Of course, he announced he's going to step down in the middle of next year. That's been interesting. So a lot of people have been speculating about the future of the CBOE. A lot of their volume has been siphoned away by other exchanges. They have two primary product bases now. They have the SPX and, of course, the VIX, which we talk about on this show all the time. S&P license McGraw-Hill has since been acquired by their crosstown rival, the CME, so there's a lot of speculation that the CBOE may end up in the CME's hands. People wondering if Bill Brodsky would stay around to see that day or hand it off. He indeed chose to hand off the reins to Ed Tilly, who's going to be the new CEO over there. Of course, I think for a lot of us on this show, most of us at least, come from a market-making background. I think for a lot of us, it's always reassuring to at least have someone at the head of these exchanges who's at least dabbled in the core business of these exchanges, and of course comes from a market-making background. So I think that perhaps is at least reassuring to some of us that someone at the head of an exchange actually has done the core business of that exchange. It's always nice when you run a widget company to have at least made a widget in your day. And I think for a lot of us who come from the trading side, that's an interesting development over there. CBOE, we'll see how that plays out in the coming months. Bill Brodsky will still be around for quite a while over there as executive chairman. So not much changing right away, but still interesting enough. I know a lot of our listeners, even on the active retail side, like to stay on top of these types of things because the developments at the exchanges and indeed in the business as a whole do come back to impact them in various fees and regulations that could make an impact on their trading account. But I think now, with some of that final business put to rest, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune, I love that. It's the quote-unquote new odd block theme. We've been playing it for about a year, but I still like it. I still do a little dance every time that little theme comes on. Very funky, and it leads us into a funky segment, which is, of course, the odd block, where we break down some of the interesting and or unusual options activity that came across our tape today. And as I have been doing for the past few shows, I'm going to surrender the reins to good old Andrew over at Option Pit, because he has indeed been cultivating a lot of very interesting, unusual activity for us over at theoptionsinsider.com. And if you'd like to play the home game along with us and see what we're talking about here, or perhaps look at some of the other alerts that we don't have a chance to talk about on the show today, then by all means, surf on over to theoptionsinsider.com. You can find everything we're going to talk about and much more right there. So, Andrew, I know you've had a busy day cultivating some unusual activity. What's the first thing that caught your eye on today's session?
Well, we've got it. We're going to have this. The theme of this odd block is not
I like
all
themes.
As it appears to be.
I like it.
So what I wanted to do is, actually, I was talking with Mark about a couple of these. So on Friday, this is why it kind of dovetails, because there's similar type activity. A stock of renown called END, maybe the end of the world, maybe the end of this, but it's actually Endeavor International Corp. A little tiny one. Actually, we sent you a note. This was a Longo special type trade.
These are definitely in our wheelhouse.
A block of 2,640 calls go up, a D7.5 calls, and the stock's trading $6.50. Okay, so we're $1 out of the money with a week to go. Normally, you would say this guy is that's wildly speculative.
Yeah, he knows something. On first blush,
volume,
anyway.
Exactly. Daily contract volume is 426 contracts. So this block of 2,600 was relatively big. Now, the open interest on the strike was 3,900 contracts. But the nature is volatility was definitely going up. So this guy was buying these calls. Interestingly enough, today, the stock is down $1. So you never know what actually is going to happen with these things when they trade. So one thing is down $1.11, so it's almost like a 15% drop. So sometimes traders will hedge a short stock position with some out-of-the-money calls going into earnings. What they do is they'll figure out, I'll give away a nickel just so I can be short, though, 260,000 shares. So the guy gives up his nickel 2,000 times when he's going to make $1 2,000 times. And that's basically risk control. So what I did is today I saw some similar looking paper in Taiwan Semiconductor. Again, pulling out all the most obscuria that we can find. That's why it's called the odd block and not odd block, I guess. Taiwan Semiconductor trading very close to its 52-week high of 16.99. It's trading around 16.86 today. Paper this morning bought the D17.5 calls for a nickel. They lifted the offer, bought a block of 5,422 calls, and with 8,500 going up on the day. Now, this type of paper was as I try to pass the sniff test, is feeling a lot like the other kind of paper, right?
It looks fairly similar, yes.
About $1 out of the money. They're buying a bunch of calls. Vol goes, ripping up on this strike. There's already open interest on the strike. So, is this somebody coming in and hedging a short stock position with something that might happen? So again, don't really know how it's going to turn out, but it smells awfully similar.
And just to clarify, you didn't see any large blocks of stock going up, so these weren't tied in any sense.
No, I wasn't seeing any large blocks of stock. Now that doesn't mean they just could have traded somewhere where I can't see them, but no, as of right now. So again, this is a very interesting type of paper, speculative call buying with we would say probably slim chance to be right, unless, of course, somebody knew some earth-moving news was about to happen. So again, TSM, keep an eye on that one. I mean, even maybe even a small backspread in January against, of course, Don Schlesinger's, I can feel he just shuddered when I said that. But, sometimes when you have this real speculative buying, you never quite know what. And lastly, this one I really liked. Okay, I like this one a lot because this is like my XLF. And, I think the financials is probably what's been leading the market recently. We need the financials to lead the market, especially when Apple's not doing anything. But this is a good piece of good old-fashioned speculative trading. I like this. So the 16.5 calls weren't listed on Friday, but were listed today. And since XLF is trading around 1627, it actually finished the day a little higher than that. Trading real near its 3-month high. It looks like it wants to make a new high. Trading 1633 today. The D16.5 calls traded between 1 and 3 cents in size. And Alex was just telling me, "Oh, Andrew, just buy the stock. Buy the stock. It's only $2." Okay, I got that. But sometimes, these little cheapy shots, when you have the prospect of the large gamma move, can be really interesting. It's not something you take your whole portfolio and go buy, but it won't take much for, you buy a 10 lot for 2 cents or 3 cents or something like that. when there's this much, potential upside. I mean, they pass the deal, everybody gets frothy. What's going to happen to the XLF? I mean, it could be trading 1675 in a heartbeat. So that's the kind of paper. So total, I saw 8,600 contracts, and it went up in scattered blocks, a lot of 100 lots, 200 lots, 400 lots, stuff like that. So it's kind of spread out paper. But the fact there was no open interest, zero, and all of a sudden it started trading size, I think people were starting to buy the end of the cliff scenario. They went for the gamma, which I think in general is a good idea. And I mean, XLF was up 33 cents today. None of those stocks are even sniffing any 52-week highs. So I think it's real easy for this thing to, could break out, and a lot of this opening paper very well could get things going. So that basically is my odd block report.
It looks like they might have just added the half strikes, because there's no open interest on any of the half strikes here in Dees on XLF.
Exactly.
But there's 200,000 on the 16, 200,000 on the 17. So all this open in paper here on these half strikes, they're giving people a little bit more nuance in their strike selection, and someone taking advantage of it. It looks like almost 15, nearly 16,000 went up today in total on that 16 half strike.
And that's when I looked at it halfway through the day, we had 8,600 contracts. So it's, all of a sudden, where does the market go if they say, if they reach a deal? So.
Yeah, that's interesting.
You got to ask yourself.
Also, that's a good one. It looks like these half strikes are getting some love now. They should have had those in there before. How do you have XLF without all the half strikes? Because there's no open interest on any of them out there.
I know. I know. So it's new.
Yeah, new positioning possibilities. So everyone's diving into them.
And then of course you got to sell them for 3 cents. I don't know. Who
you have to. There's no other thing you could possibly do with them. But jumping back to the END for a second, the Endeavor. It looks like there's someone dove into the D7 half puts today. Maybe it's your same friend who's come on the other side of the tip now, picking up some downside. About 2,000 of those went up today. And also a Jan 5 straddle looks like it went up in some pretty decent size, about 3,500 contracts today. So I think that looks like a straddle. I haven't had a chance to parse the exact what exactly they did, but there's no open interest, so it's all open in paper out there. Looks like he bought the puts and perhaps sold the straddle, or maybe it's two different separate trades. A name like this with such low volume, normally they're probably linked. But
yeah, it's usually one guy with some money maybe wants to finance something.
Exactly.
And,
but
I'll tell you in a second.
Interesting stuff with the Endeavor. I'll have to keep an eye on that one. That is indeed an odd block special. $5 stock, lots of paper. We love it.
All open paper looks like. Vols up actually after this move, between 3 and 8% across the board. So
there you go. Maybe he's gobbling up that straddle. Alex, how offensive is that to you? If Alex is just, or if Andrew's just buying some upside in a $2 stock, how offensive is buying a straddle in a $5 stock to you?
Not as offensive. I mean, Andrew's got enough money to go on the board of that company, so.
He's just doing our little show here for giggles.
Yeah. No, buying premium to a $5 straddle is perfectly acceptable.
Well, good to know that you're open-minded to all things, Alex. And speaking of all things Alex and all things OX, it is time indeed to close out the old odd block and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is the portion of the show where the boys over at OX, namely Alex these days, take the reins, and I get to take a bit of a rest. And lately, we've hit on an interesting new topic for the Express Block. This is, of course, where Alex, indeed the man behind the Idea Hub over there at OX, walks us through some of the interesting ideas that the Idea Hub is churning out lately and what some of the OX customers are doing with that. So without further ado, Alex, take us into the land of the Idea Hub, sir.
Thanks, Mark. I'm actually going to digress a little bit today. And in the last few shows, we've talked about Idea Hub, and then I've talked about something called the walk limit product. And I've gotten a whole slew of emails, and our product guys have gotten a a whole slew of emails asking what the heck is the walk limit product. So let me take a moment and talk about that.
Sure. After that big setup for the Idea Hub, you throw me under the bus. No, I'm just kidding. I think that's actually a good topic because we've received some similar inquiries over here at Insider. So it'd be good to walk them through that. No pun intended again.
Okay. So just a quick refresher. Idea Hub is the part of it that we showcase every week is the premium harvesting section. And what premium harvesting does in that section is we take the 16 volatility benchmarks from the CBOE, and those are benchmarks like the VIX, the NVIX, the VIX on Apple, the VIX on Google, and we take that volatility and define what a one standard deviation out of the money, put credit spread, call credit spread, and iron condor would amount to. So, for example, today it brought up the December regular expiration 490, 480 put spread in Apple, the 500, 560 call spread, that condor trading for about $1.21, $10 condor, $1.21. That's a 12% return on risk. But one of the cool features and another exclusive over here at Options Express is we have the all-in-one trade ticket, which essentially once you go to the Idea Hub, you click on trade, it'll take you to an all-in-one trade ticket, which will populate all four legs of the condor. That's in the industry, but here's the industry exclusive. We have something called the walk limit. And what the walk limit allows you to do is to enter the order at a limit of the midpoint of the NBBO. So let me give you a hypothetical example. Let's say the national best bid offer on that condor is $1.21 is the natural. But let's use a hypothetical example. Let's say the national best bid offer was $1.20 midpoint, $1.15 on the bid side, and $1.25 on the offer side. Let's say you wanted to sell the condor. Walk limit essentially allows you to enter the order at the midpoint. It will then shoot an order to one of the two exchanges that has a spread order book, so that essentially, again, the market I've created is $1.15, $1.25. The midpoint's $1.20. What it'll do is it'll enter the order at $1.20, leave it there for 2 seconds, and then walk it down in increments. It'll cancel the $1.20, re-enter the order at $1.19, leave it there for 2 seconds, walk it down to $1.18, $1.17, $1.16, and then if there was no dark paper or orders resting on the book, it would fill at the $1.15 natural. The cool thing about the walk limit is it frees up time. You just don't have to sit there all day chasing the market. The automation will do it for you. And here's the real cool point. Right now, the way it's been written, it starts at the midpoint, and on a credit, it walks down to the bid. On a debit, it walks up to the ask, and it walks up in whatever the trading increments are. If something trades in pennies, it'll walk it in pennies. But as of hopefully mid-January to late January, it's going to become fully customizable so that you won't have to start at the midpoint. You'll be able to start at a custom starting point and end at a custom starting point. And the product development people who work with me to develop Ideas Hub basically threatened my life if I didn't talk about walk limit today. So we're going to talk about walk limit today.
I think that's actually an interesting thing because, we get emails all the time at Insider, how do you work an order like this? How do you do that? That's the way a lot of people do it. They start midpoint and they work it a little bit here, a little bit there. So in essence, it's essentially automating the working process for you, which is a very valuable thing. I could have used this last week when I was doing some trades and I didn't have time to walk every increment like I wanted to. This is a way to do that. One question I would have for you is interesting. You talk about customizing. You said it's automated right now at the 2-second increment. Can you play with that increment as well? Can you say maybe down the road, I want to work it 10 seconds or a minute there, before I come down to the next increment? Is that something they're planning to add some functionality to as well?
iteration 2 is just going to be price variability. I'll talk to them about iteration 3, but the cool thing about iteration 2, which is what's due mid-January, is you won't have to start at the midpoint. You will be able to customize the start end. In terms of time, that's not in iteration 2 yet.
I think this is an invaluable thing for a lot of the listeners out there, because they're all doing this in some way, shape, and form right now. So if you can find some way to take that off their hands and do it in a reliable and quality fashion, then that's a unique thing. It looks like here you can just select that from the drop down in the all-in-one trade ticket. So if you're looking for how to do this, listeners, and you're in the OX all-in-one trade ticket, it's one of the selections in the drop down. You'll see walk limit debit, walk limit credit, what have you, and you can set your prices there. So it's pretty easy to find. It's all built into the trade ticket now. I encourage you, if you do a lot of working your orders, and I'm sure if you're listening to this show, you probably do, or you should be at the very least. This might be a good way to take some of that off your hands. And,
plus, if you have a busy day and you've got 3 or 4 spreads working, it's going to be very difficult to watch them all, especially if you're a condor trader. You got 4 spreads working. You're looking at 16 legs. The walk limit will do it for you automatically.
I had this exact scenario come up last week. I was trying to work some orders, some put spreads in Apple, like we were talking about at the top of the show, and I was in between conference calls and a couple other things. And while I'm setting up one thing, I'm trying to work my order is, of course, weeklies. These things were eroding by the second. I should have used this. This would have saved me a lot of hassle. And next time I certainly will, because automating that working / chasing process is certainly something I could use. I mean, we talk about options a lot. I do a lot of options things, but ironically, I'm very busy, so I don't have time to work all of my orders to the maximum degree they should be. So this is something I think would certainly be helpful to me and to a lot of our listeners out there. Go ahead. You have something else, Alex?
Yeah, I was going to say, I would bet if you asked Mike, Andrew, and myself what our probably worst trading mistake ever was, it was leaving an order and then forgetting about it. I had it once in a company called F5 Networks, and I had a buy right on, and I was trying to buy back a call option, and it was something like nickel dime, and I wanted to buy it back because it was, a day or two before earnings, and I just got, occupied, and rather than get something to autopilot the order, I just had, trying to buy it back at a nickel when I should have bought it back at a dime, and I never got the trade off, and the next day it gapped $11 up. And that's one of those where you say, for a nickel, you lost $11.
Yeah.
And it happens. We all get busy. We all get a phone call. We all get another spread we're working. We all get something going on, and then all of a sudden you get your head handed to you. And this automates it away from you, which for some people who are busy, they're going to want to automate it. Some people are always going to want to enter that order, cancel it, enter it, cancel it. It's just, kind of the nature of the trader.
Yes, I think we all have those horror stories, unfortunately. And so if something like this can also take 1 or 2 of those off of the table, that's worth it in and of itself. Before we go from the Xpress Block, Alex, we do have, instead of doing a whole listener mail about this, we have one quick question that is right up your alley, so I thought I'd just do it here because we are talking about the Idea Hub. We have a tweet from Mr. Pennystock, and this is directed towards you, Alex, so it's right up your alley here. Alex, does OX have a premium buying section of Idea Hub to go with the premium selling section? A pretty straightforward answer. Let's take it away there, Alex.
Yeah, the only premium buying in the hub right now are the earnings ideas and some of the big movers ideas. There is no quantitative buying, which would be the sort of mirror image of the quantitative selling. Just the whole thought process lends itself more to a premium harvesting idea, the selling using those quantitative volatility benchmarks.
So there you go, Andrew, not the only degenerate premium buyer in our audience. There are a few lurking out there who want to actually buy some options every now and then. And Mr.
Pennystock guy.
Yeah, Mr. Pennystock here apparently is one of them. Well, thank you for that, Alex. Another idea for the team to mull over down the road. And that's going to do it for the Xpress Block. And now we're going to dive right into the Strategy Block.
The Strategy Block.
All right, listeners, that fancy Masterpiece Theater-esque music, if you will, means it's time yet again for the old strategy block. This is indeed the portion of the show where Uncle Mike Tusaw graces us with his presence from the scenic highlands of St. Charles, Illinois, and dispenses with some options, wit, and wisdom. And Uncle Mike, you know I always put my birdie network to work before you come on the show to try to divine what you have in store for us. And my birdies are pretty good usually. And one of them today, he's not as reliable as the others, but he was telling me today that he's thinking you're talking about some sort of ratio, perhaps even a ratio combo. So let me know. Should I give him his bird feed for today? Did he earn it?
Oh, not only that, I think you ought to give him put him up a rank or two if he's not usually that reliable. He hit the nail on the head.
Leader of the birdie squad, you're saying, huh?
Maybe. I don't know. I mean, I don't know how you run those birds, Mark, but you got something going on there.
It is the holidays. Everyone got their hands out for bonuses and promotions, so perhaps he would appreciate that.
Yeah. Fill his wing instead of...
There we go. I like it.
So, well, anyway, what I want to talk about today... right now, there's a lot of uncertainty in the marketplace, and I know you could always say that any day for any trading time period since the beginning of publicly traded anything. But let's say right now that you feel that you want to get into a stock, but you don't really feel comfortable at this level. However, if the stock goes up, you're going to be kicking yourself, and you just don't know if you can live with yourself for such a thing. But you think maybe you should wait till the stock goes down, but oh, wait a minute, I remember if it goes up, I don't want to miss out on the upside. And if you're battling those mental wars with yourself, I want to give you just an idea with which you can kind of calm yourself down, so to speak, and use options as a way of doing such a thing. Now, I'm going to go with my all-time favorite stock that I always use no matter what for my entire trading career, and that is XYZ stock, because XYZ stock always has a magical way of doing exactly what I want it to do. Let's say XYZ stock's trading at $55 per share, and you would love to own it if it were to go down to $50 a share, but you just, based on your indicators and your logical decision-making process, you feel it could definitely go up, and you don't want to miss out on the upside. What can you do when you're kind of wrestling those things within yourself? Well, allow me to introduce you to the ratio combo. A combo is a trade with which you could sell a put, and then with the money with which you received from selling the put, you could buy a call option. Now, you can set up a combo in a lot of different ways, and what I want to talk about today is a way of setting it up with which you could use it from a ratio standpoint. Now, let's say that you're leaning a little bit more to the school of thought that you just want to play it safe because if it goes higher, you want to at least be a part of it a little bit. But for the most part, you're thinking, okay, this thing's a buy at 50 and it's at 55 right now. What you could do is set up a combo at a ratio. So whether you're going 1 month, 2 months, or 3 months out, whatever the case may be, depends on the individual situation. Perhaps you could sell 2 puts at the 50 level. And then with the money with which you received from the put options, buy 1 call option at the 60 level for the same month. Now, what does that do? Well, if the stock stays the same, because of the fact that you did a 2-for-1 ratio, you're likely going to receive a credit for that because 2 puts are going to receive more premium than the cost for the 1 call option that you bought at the 60 level. So that pretty much solves that problem. If the stock stays the same, you're going to get a little bit of credit for it. Are you going to get as much credit as if you would have by just selling the puts? No, but unfortunately, nothing's perfect in this world. Now, let's say that the stock goes up, and it just goes up like gangbusters. You were right on your hunch and on your analysis. It just goes up. Well, if that's the case, the puts will expire worthless, and you'll get your credit for the puts expiring worthless. The good news, the other good news about this is that if the stock does go up, you'll benefit from the call option should it go above 60 or significantly above 60, or maybe if it goes up towards 60 and you cash out early. So by doing that, you're kind of satisfying the mental war with which you're playing. Now, of course, what if the stock goes down? That does happen in this business, so we do have to prepare for that. Remember, from your original thought, you'd be happy owning the stock at 50 anyway. So by selling those put options, you're getting paid to put on a limit order essentially for doing such a thing. That way, if you want to own 200 shares of that stock at 50, yeah, the call's going to expire worthless, but the money with which you received from those 2 put options will cover that cost, and you'll be long that stock at 50. Once you're long the stock, or once the stock goes to the 50 level, perhaps that's the time with which you can begin your risk management process of determining where to bail out if it goes against you, where to put on another hedge, whatever the case may be. I'd recommend having that plan before you even pull the trigger on any trade, but that's just me. So with that, if you're wrestling the demons in terms of what do I do, and you're having indecisiveness over when to actually get into an entry point, options allow you the opportunity to define your entry point.
All right. Thank you for that, Uncle Mike. And that delves into some interesting waters. We've, of course, hit on all sorts of ways to structure combo/risk reversals here on the show in the past. That's another interesting way to do it. The old ratio combo, ratio risk reversal, ratio what have you. We love ratio anything on this show, pretty much. But yeah, that's a good, interesting idea. One for our listeners, indeed, to mull. Of course, XYZ can be a heartbreaker sometimes. I'm not sure if I would recommend XYZ. I've had some dangerous dalliances in XYZ, shall we say. So it's like my Cisco for you, you know, or Andrew Zynga.
Not XYZ, no.
Not. Oh, XYZ, the heartbreaker indeed. So thank you for that, Uncle Mike. And now we're going to close out the Masterpiece Theater block, a.k.a. the strategy block for this week, and dive right into our final segment, Around the Block.
Around the Block.
All right, and those car horns means it's time for our final segment of the afternoon. This is, of course, Around the Block, where we talk about what's on our radar, what we're watching for the next few segments, and indeed for the rest of the week, because today is our early show. And we talked last week a little bit about, of course, well, at top of the show, we hit on a lot about fiscal cliff. I think that's top of mind for all of us here. We remarked about how volatility didn't exactly come off to a great degree until the end of the day, predominantly because a lot of people are still concerned about what's going on in Washington, keeping some of their powder dry in case we do have some interesting movements going on post fiscal cliff, post compromise, whatever you want to call it. Uncle Mike talking about how he's positioning with just the puts and the underlying for GLD and a few others because he wants that wiggle room. I think a lot of people are doing the same across a variety of different underlyings and options right now. One of the names we did hit on last week, because it's one of the few interesting earnings to discuss right now that's coming up over the next week, is, of course, RIM. We hit on it on the last show. The once darling of the Great White North, fallen on some hard times of late, but has, of course, rebounded substantially over the past few months. This is the name. We were just joking about it recently, not too long ago, back in early November, trading around the 8 or so handle and joking whether or not we wanted to put on some of the 5 puts if those were a safe sale at this point. And now RIM, of course, having turned it around substantially, trading almost closing a little bit south of 14 today. So a lot of interesting stuff to watch with their earnings, which are on the 20th after the close. So we'll be able to discuss them live during the show, which should be fun. I don't know, Andrew, Uncle Mike, you guys paying any attention to RIM? You watching this one for earnings, for perhaps for your clients?
I'm staying away from it. Wouldn't touch it with a 10-foot
Not
pole.
loving the beast of the Great White North, huh?
We're looking at looking at selling the Dees iron, kind of an iron butterfly in there. The risk reward was like 65-35 on that. So it didn't look too bad to generate some data for the day. But we'll see how long we keep that on if all this cliff stuff starts. I just can't believe they're going to come to an agreement 2 weeks before the deadline, but I guess it could happen. So.
Yeah, this is an interesting one, of course, because it has a lot of interesting potential minefields lurking around in the RIM. Of course, it has almost doubled over the past month or so, so there's a potential for a significant retracement going into and coming out of the earnings. So any position you put on, of course, you want to be risk mitigated, risk limited. Iron fly, one of my favorite strategies. Talk a lot about that here on the show, as well as the old risk reversal. So one of my favorites. Interesting iron fly opportunities in RIM. I've yet to make my decision how I'm going to play this one, if at all, because it is indeed perhaps prone to such a dramatic movement post earnings. If it's worth my limited time to put something on out there, perhaps I'll utilize a walk limit Alex, and I'll allow that to do my working for me going into RIM earnings. But obviously, fiscal cliff on everyone's radar. So what else? Anything else, if anything at all, there, Andrew, that you're watching for the next couple of days into the end of the week?
Yeah, just a couple of seeing if we're long some Jan premium against some short December premium, and just wondering if maybe we need to take that off a little early. So we'll see. But I like the idea of owning some of the Jan through whatever, and having December finance it. I mean, it's worked last week, the week before, so, we'll see how far it goes. But.
And Alex, what's catching your eye for the rest of the week here?
Nike earnings on the 20th. Also a big name, and there have been some variation in earnings in the last couple of reporting periods, so I keep an eye on Nike as well.
It's a $100 name, so a little bit more potential juice out there in those hills for Nike. Not a name we actually talk about on the show a lot. I'm not sure why that is. It hasn't really come up that often. Perhaps we need to add it to our discussion, our repertoire. We seem to be dominated by fruit companies and metals on this show. Perhaps we need to mix it up and get some footwear in there as well. And Uncle Mike, what's on your radar for the rest of the week here?
Well, the way it's just the fiscal cliff stuff. It's a Howie Mandel market, deal or no deal.
So you're just waiting and watching.
That bad one.
waiting and watching, keeping the short-term premium to a minimum, at least the short premium, and waiting and watching and seeing what comes out of good old Washington, eh?
Pretty much, yeah. What else is there,
Yeah,
well,
at this point, not too much. Watch out for some special dividends, as we said before on the show. And other than that, you may perhaps keep your powder dry. Put on some very risk-limited, risk-mitigated trades, I should say, to prepare for something substantial coming out of Washington in the days to come. But unfortunately, that's going to do it for Around the Block. That's also going to do it for this episode of the Option Block. Before we go, I like to check in with all my cohorts here on the old All-Star panel to see what they have going on in their respective necks of the woods that may interest you, the listener. Starting off with you, Andrew, beaming in from the great state of Maine. What is coming up in the land of the pit?
The land of the pit. Well, we are getting ready to launch some new services, which we'll be able to tell you about probably next week, maybe by the end of this week. We don't really have much going on for the end of this month as we kind of wind down the year. But other than that, that's, Mark and I got together last week and we're looking forward to the new year and launching the new services, top secret until they launch. And we'll start, our regular webinars again in January once everybody sort of comes back from the holidays. And the cliff. Once we've all jumped.
Once you've all jumped off the cliff. Once all the lemmings have gone over the cliff, then you could resume your services, sir.
Exactly.
All right. And Alex, what's coming up in the land of OX?
Just year-end stuff. It's reasonably quiet. Seeing a lot of year-end type of activity, trading, people positioning for next year. But a couple points you made. Be careful about special dividend stocks and be really keenly aware of we're going to get some thin markets here going into the year end, especially in some of those last weeklies and end of quarter. If you got positions on there, I think it's going to be thin here, and I would proactively manage those kind of positions.
Good advice, as always. Thank you, Alex. So, Uncle Mike, beaming in from the land of St. Charles, Illinois. What is coming up in the land of KYO that may intrigue our listening audience?
Well, we have our final webinar of the year. It's going to be with Jim Bittman from the CBOE. It's going to be on the 20th at 1 o'clock Central Time. He's going to give us an introduction to the VIX. So we're excited to hear what Mr. Bittman has to say, as always. And coming up in January, we're going to have a lot more webinars, and we're excited.
And before we go, how was the mother of all webinars? How did that go?
It was phenomenal. We were excited with everything that we had on there. It was just the cyber version of a town hall meeting, so to speak, and there was a lot of great material. It was excellent.
Well, listeners, if you missed that one, shoot Uncle Mike an email or surf on over to knowyouroptionsinc.com, and you can perhaps catch an archived performance of indeed the mother of all webinars.
The granddaddy.
Yes, the granddaddy of all webinars. All right, and that's going to do it for the Around the Block segment. But before we go, I, of course, want to thank all of you out in the listening audience for downloading and streaming and subscribing to this program and making it such a success. We also want to thank all of you who've taken the opportunity to write in. We didn't have a chance to get to all of your emails and questions today, but we'll get to them on an upcoming show. If you'd like to join your fellow listeners and sound off and send us some questions or comments, then you can do it in a number of different ways. You can surf on over to theoptionsinsider.com and use our comment system there. Leave us a comment on an article. We'll find it for the show, and we will find it and perhaps read it on the show. Of course, you can reach out to us via email, questions@theoptionsinsider.com. Just put question for the option block in the subject line so we know which show you're referring to. You can also reach out to us on Twitter or via Facebook. Just search for Options on Twitter, just add Options, or search for Options Insider on Facebook. A lot of ways to reach out to us and join us here on the old Option Block All-Star panel. And of course, we want to thank all of you out there in the listening audience. And of course, keep your powder dry and stay safe for the rest of the week as we approach the looming fiscal cliff. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.